Hello everyone. As you all probably know, investment is a word that may sound extremely daring to the average person, but it is a norm for financially smart players. Investing in money-making assets instead of liabilities is what separates the rich from the rest of the safe-playing crowd. We hope this video brings you value, and we'd appreciate it if you would subscribe to this channel. It means a lot for us to have your support. Also, we want to be more in touch with you guys, so we'll answer every question from the first comments within 24 hours. So make sure to hit the bell notification to be the first to be notified when a new video goes up. With all that said, here are the 10 best investments in the world. Number 10, precious metals. When we're talking about precious metals, there are tons of them, but the most prominent ones include silver, palladium, platinum, and obviously gold. If you aren't quite aware of it yet, investing in precious metals is much more precious than it sounds, because not only is it a very stable growing market with little to no depreciation, but precious metals can also protect your money from high rising inflation with time. Well, in simple words, once hyperinflation takes hold, the currency in your pocket and bank account is severely devalued. But instead, if you hold protective assets like gold and silver, this hyperinflation period wouldn't quite affect you as much, because these commodities retain their value and have high liquidity that allows you to convert the asset to cash anytime you want. Experts usually recommend that around 10 to 20% of your investment portfolio should be in precious metals to keep it balanced, therefore making precious metals number 10 on the list. Number 9. Mutual funds. Although whoever you've discussed it with has strongly disagreed with the idea of investing in mutual funds, there's way more thinking of other than opinions, and we're here to give you the correct reasoning as to why it is a great investment. First of all, let's understand what a mutual fund does, as this is where most people seem to get things mixed up. In the most simple words, a mutual fund collects money from investors like us and puts it into further channels of investments like stocks, bonds, and other securities. To your advantage, these investments do not require any of your time and efforts because they're managed by experienced fund managers. And although mutual funds may carry a narrative of being a very high-risk investment, it's only partially true. Losing your money in mutual funds is possible, but the chances are really, really low because of the diversification of your investment. So, if one or more invested securities devalue, the other channels of return are there to cover it up for you, which is why mutual funds are counted amongst the best investments today. Number 8, cryptocurrency. Although highly risky, but a highly rewarding investment as well, cryptocurrency falls in a sort of skeptical category because of its very recent boom, which makes investment quite volatile. But this doesn't mean profitability isn't there. To put it in the simplest words possible, there are usually two possibilities that you need to be aware of when investing in crypto. Firstly, if wrong and rushed decisions are made, such as investing in unfamiliar cryptocurrencies, significant loss, or even losing all your money is quite possible. But if you invest with the right knowledge at the right time, making quite a huge fortune with little to no effort has its possibilities. As it is considered quite an aggressive fluctuating asset, it is usually recommended that crypto should hold around 5% of your investment portfolio only. Number 7, private equity. Although a very heavy investment, but if played right, quite a rewarding one as well. Private equity essentially works the same as a mutual fund, where money is collected from investors and is put into potentially profitable entities like startups, ventures, or private companies. The funds raised may be invested towards the growth, efficiency, improvement, or development of a business entity. The twist here is that compared to a mutual fund, investing in private equity comes in with a much greater price as well as a risk because of the ventures being in such an early stage, therefore making it quite volatile to failure. As of 2019 alone, it is estimated that around 90% of business ventures fail, and this can be due to multiple reasons, which, unfortunately, aren't your concern, as you're just a venture capitalist, and your job is just to put in money. If the business venture fails, it fails, and you simply lose your money. But You know it, it's all about taking risk. Investing in private equity opens up opportunities. You can either lose all your money or become a significant shareholder in the next billion-dollar company like Apple, Amazon, or Google. So, it's always best to play brave and understand the potential, as private equity is not the game of safe players and small eaters, rather people who crave a much bigger bite. Number 6, high yield savings accounts. Perhaps the most simplest and effortless investment yet. A high yield savings account essentially gives you interest on your balance, and these interest rates are much higher when compared to typical savings accounts. Considered much more on the safer side of the risk category, high yield savings accounts can only carry the risk of being affected by inflation, as the money you're investing in is a protective asset state. The risk of it devaluing due to rising inflation is quite possible. But aside from this, high yield savings accounts carry nothing other than advantages like high liquidity and quick access to your cash, significantly less overhead costs compared to average savings accounts, and require minimal effort aside from a good cash balance. Therefore, counting high yield savings accounts amongst the best investments. Number 5, exchange traded funds or ETFs. Similar to stock trading, exchange traded funds or ETFs are solely based upon the demand and supply factor, which kind of separates them from the traditional mutual funds. Usually traded within stock exchanges, ETF investment works by either giving off dividends or capital gains to investors, and are generally considered to be towards the safer side of the risk category, as the majority of ETFs are index funds, which are not likely to downtrend anywhere in the near future. But the prices of ETFs are usually very volatile to fluctuate throughout the day because of the demand and supply mechanism of the trade. Unlike mutual funds, ETFs benefit from having lower expenses and are much more tax efficient in comparison. Like stocks, bonds, or any other sort of investment, investing in ETFs calls for bold but wise decisions to build long-term wealth. And well, just to put it into perspective, top performing ETFs like Invesco QQQ Trust and SPDR S&P 500 ETF on average grew more than 600% in the last 10 years. Number 4, intellectual property. Intellectual property, considered to be one of the most valuable intangible assets, simply refers to the creation of the human mind. Yes, it sounds confusing, but don't worry, we'll explain it. Well, let's say you're a graphic designer and you've been requested to design a logo by a client for his or her clothing brand, which he's paying you $500. So, the $500 the client has paid you is for developing and transferring the ownership of your intellectual property to them. Now, you may be asking, how is this an investment? Well, when an intellectual property investment is made, a much higher capital return is expected. To make it even easier, let's take into account intellectual property investment stories from the past. Andy Warhol, the artist behind the famous Four Marilyns painting, which was first sold in London for $1.6 million in 1992. Later on, in 2015, the same painting sold for close to $36 million at an auction. Crazy, isn't it? Well, yeah, that right there is successful intellectual property investment. But intellectual property isn't only limited to art. It can include other intangible assets like patents, trademarks, design, and even web domains, which you can acquire for little money, but if you're smart, sell for huge returns or possibly even millions. Number 3, start a business. Perhaps the most solid investment yet, but a tricky one as well. Starting your own business requires tons of efforts, work, long nights, stress, and money from your pocket, but honestly, is all worth it if done right. Think about it. Building your own empire and having a regular cash flow of passive income, profits, and increasing net worth sounds like a dream, doesn't it? Apart from that, unlike any other investment which may pay you dividends or capital gains upon rising, having your own business will pay you much more than that. In fact, you're going to be the mastermind of how your business makes money and how everything works. One of the biggest advantages of this investment is that everything is unlimited, which means that there's no approximate or set limit of profit or revenue. Your business can have either downfall, grow steadily, or skyrocket. It's all about how you handle it. You can start a business with $100 and an opportunity and turn it into a multi-million-dollar international company over time, which is why it is said that your business is your valuable asset. Just to throw in a little fact, believe it or not, Steve Jobs started Apple with a capital investment of $1,300, a business that later allowed him to acquire a net worth of $10.2 billion at the time of his death. If you want to learn how to start your own business, you can check out free training in the description below. Number 2, real estate. Coming towards the end of the list, how can we forget the king of all investments? Real estate. It is considered to be quite a low-risk investment, as real estate markets usually keep a steady growth and appreciate with time. Although it may be overwhelming to take everyone's opinion and advice into account when investing in real estate, the fact is that unless you haven't done your little homework and research before investing in real estate, there are possibly little to no chances of suffering from a significant loss. The unique thing with real estate is that investors usually shy away from illiquid assets due to the lack of ease when converting the asset to cash. But real estate, or property you can say, is one particular asset where illiquidity is generally considered to be okay. There are two ways to make a return on your real estate investment. It can either be rent, which is income on a monthly basis, or capital gain, which means the overall value of the property appreciates. Another huge advantage of owning real estate is that it can give your kids or future generations an income-generating asset, which they can sell when they're in need of the money. Number 1, invest in yourself. Although the talk may be quite cliche, but it always holds its place. Investing in yourself is the most important and beneficial investment by far. Think of it, you have all the money you need to buy stocks, bonds, properties, and whatnot, but the only thing you don't have is your health, financial intelligence, or maybe even courage. Why mention these 3 qualities in particular? Well, if you talk about health, every one of us knows that it is the most important thing we have and need to make beneficial decisions. If you don't invest in improving your quality of life and well-being, how are you possibly going to invest in money-making assets while lying down on the hospital bed? Well, even if you do, what's the point? You simply can't celebrate, enjoy, or benefit from it in any way. Moving on to financial intelligence, investing into this particular area of your mind will take you to the next place. Real estate income and stock dividends simply cannot. This is because financial intelligence has no limit or extent. It's all about training it to the point it starts working in favor of you. And how can you invest into it, you may ask? Well, by simply putting in the extra effort to read financial books and acquiring the most relevant information through whatever sources. The last one, courage, is simply a byproduct of the financial IQ investment. Why need courage? Well, like Robert Kiyosaki, the author of Rich Dad Poor Dad, mentions that in life, it's not always the smart one who gets ahead, but the bold one. It's quite clear that he refers to having the bravery of taking financial risk. And how is bravery obtained? By simply having more options, or in easier words, knowledge. Anyways, this is all we have for today's video. Don't forget to subscribe to the channel so you don't miss out on more informational videos just like this one. Let us know in the comments below which investments are you on the hunt to acquire, and we'll catch you in the next one soon.